I think foremost in most investors' minds would be that dividend. No big surprise because you did put out a trading statement saying that you were looking at this dividend. Why the change in your dividend policy at this stage, Richard?
I think the reason for the change is really the fact that it's the first time we could really do it. Without going back too much to the past, the MGX debacle, which put us in the position where the debt we had was created a lot of debt for the group and put us in the position of survival and inwardly focused for many, many years. We managed to refinance last year for the third time and finally have a bit of excess cash so we can actually pay a dividend.
So feeling quite flush?
Yeah, I'd say so.
What's the dividend policy going to be going forward?
We're going to go for a 4 and then a 3 times cover. Ultimately, it will be a 3 times cover. That is our goal.
Okay. Just looking at the debts, you had it restructured last year. You took some loans out with Standard Bank. You have better interest rates going forward. Tell us about the debt position, where it stands at the moment and where you're taking that.
Yeah, we refinanced in 2006 originally, and then we did the refinancing in April 2010. The reason for that was around making sure we had better cash for expansion, really. As I say, we've been inwardly focused. We've also, through that process, managed to eliminate any mezzanine debt, which obviously is expensive and also makes shareholders a little bit nervous, I think. So we've now got an amortizing loan and a bullet loan over a 6-year period. Along with that, we've hedged with swaps, so we've made sure that we've got everything covered in terms of interest rate risk. And it really just gives us options, and that's what it's about for us, is giving us options to grow, options to pay the dividends. And I think in a net position, we were about 16 million less cash flow with the new debt structure. So we pushed out the term a little bit further. But yeah, it gives us the choices. And there'll be cash sweeps over periods as we generate additional cash, so we'll hopefully reduce the debt quicker than the initial 6-year plan.
Talk to us about the interest rate swaps, because you exited your interest rate swaps last April. Yeah. New swaps were entered into at the time. And if you look at your headline figure today, up 32% to 8.3 cents, you do mention, though, in the commentary that the normalised headline earnings per share, and that's the 15% rise, is a fair indication. Tell us how the interest rate swaps affect your numbers and why you've entered those swaps.
I think, yeah, we as you say, we closed out the previous ones April last year, and that was to make sure that we could hedge account for them, so we didn't have them hitting our income statement, because we found being fairly highly geared in the past, every time there was a swing in the interest rates, our earnings were all over the place, which was part of the reason we started with normalised earnings. The swaps we've done now have secured the position, and we had to take our new ones to make sure that we matched the loans. We also wanted a 4-year period. We wanted to make sure for the bulk of the loan period that we were secure. We were quite lucky a few years ago when the rates went up and our swaps were about to expire. And then obviously with the world economy change, the rates came down significantly. We could have been exposed there, and we didn't want to have that again. And then if I can maybe just touch on the normalised, we focused on the normalised because it's really the true position we want to give the shareholders. So we're a very transparent company, and the normalised is the situation. As you say, 31.7 I think was the EPS and HEPS growth, but there were some non-recurring items in the last year, and we take the good with the bad when it's a lower percentage on the normalised. And yeah, at the same time, we're hoping that the normalised, this is the last time we'll be disclosing it along with our June year-end numbers, and then we're just going to have straight EPS and HEPS.
Let's chat about your operational performance then.
Yeah.
And I was thinking yesterday, do people during a period of recession still go for all this data storage and the bells and whistles that you provide? Yeah. Is it something that is resilient during a downturn? Is it discretionary spend?
I think it's both. Absolutely, we're a very annuity-based business, so it's a very defensive business from that perspective. Through the downturns, we did have a bit of an impact, but more than we expected, I think. But it was more out of project business that didn't come, and people just held back on the discretionary. But the typical storage business, that sort of thing, just carries on. So for us, it was we've grown consistently every single year. We've never had a negative year through even the turmoil times. So yeah, it's a bit of both. As I say, there is project business. We were impacted that people were holding back on discretionary there. But,
are you seeing some of that project business coming back into play now?
Yeah, we found that actually it was the first half of the calendar year 2010 that actually hit us the hardest. Surprisingly, 2009 wasn't too bad, but it was the 2010. But we've seen a pickup in the last 3 to 4 months.
Growth strategies. I know you talked last year about focusing on government as a customer. Are you getting some of those government contracts?
We are. We always have been, but smallish contracts. We continue to tender for numerous jobs, and it's difficult to, people say, when's the big one coming? There have been some big ones.
When is the big one coming?
I don't know. No, look, we're out there tendering all the time. I mean, I think we did an assessment recently that about 13% of them even come to fruition. of the ones that we're submitting, never mind whether it's to us or somebody else. We'll continue on that. We've had some recent successes, but they're not huge numbers that are going to change the landscape. But we still see government as a key part of our business for going forward.
You also see Africa as a key part of your business going forward. You have 51% of Metrofile Mozambique.
Correct.
You've also been in Nigeria, though you had a change of partner in Nigeria.
Yeah.
Are you starting to gain traction in Nigeria? When will you actually be operating there?
We see we'll be operating by the end of the financial year, and our shareholders have heard that last year as well. So I'll acknowledge that it's been a long process, but we were very concerned, given where we've come from in terms of our debt, given the nature of our business, we're not going to go in there and lose a whole lot of money. It's taken a long time. Change in partner caused quite a few delays, but it was important that it happened. We just weren't getting to the finality of it. And we're quite happy, as we've mentioned, we've got an international partner now, which we see as an opportunity to leverage in other countries far quicker. And they've also got representation in the majority of Africa. So initially we're going to start with Nigeria, and then opportunities around more probably West Africa and then the rest of Africa.
And will your strategy be, when you're moving into other African countries, to partner with somebody?
We'll be looking at the same partner, yeah.
Prospects for the second half quickly?
Pretty much in line with the first half. I guess with the kind of business, it is fairly annuity based. We'd like to outperform expectations, and obviously we'll aim to do that. It very much depends on what projects come through in the next 6 months, but it'll be, we'll continue to grow in a similar sort of range that where we are now.
And shareholders can look forward to another dividend at that stage.
I'm sure, yes.